Welcome to this month's newsletter. Today is May 29th. Looking at the Nifty, we have a very bullish situation here. Looking at how the Nifty has been following your Kijun and using it as support line. Notice it is also above the Kumo, and the Kumo is strong bullish. So even into the future. So at this point, you continue to hold bullish stocks, and every dip is buyable until you see a break in this trend, which is essentially a break of Kijun. So continue to hold. Looking at Bank Nifty, let's see if I can find Bank Nifty here. It's not enough. Let me find it like that. Well, we can look at a few banks, but before that, I had a few questions which I would like to clarify here. Here's bail. Somebody asked me where to take profits. Now, that is a question which depends on what strategy you are following. So, if you are using, in this case, you had a Kumo break, or if you bought it on a Kumo break here, so you would continue to hold it, but keep in mind you have to take profits. I suggest taking some profits off when it closes below the Tenkan, and definitely a major portion when it closes below the Kijun. So also notice that it's giving you clues. The next, when the market is up here, or rather when bail is here, you see the Kijun here, which is going to run into obstruction. So you know at this point that things could be looking a little bearish. So you would definitely take some profits, even though it's above the Kumo. You still have to take profits off the table. Now, if your trading plan calls for the getting rid of the last remaining position below the cloud, so be it, right? You lost in your last 10% or 20%, you would get out here, which is essentially you still made some profits. So, but a majority of the profits were taken up into this area. So that's how you would want to do this. So also looking at IDBI. Here's IDBI. If you followed your buying on strength principle, that I've always advocated that. So notice that when it broke out here, you were looking at a potential Kumo breakout, but the Chicago didn't break out, so you would still not enter the trade. And then once it did that, this big bullish candle, Chicago did break out. So where do you buy? You buy on strength. That is absolutely the way to do it. Is you want the bulls the next day to come in and take out the high, um, because the high represents indecision from or point of resistance from the day before. So you want the bulls to take out that high, and you can place your buy stop order above that. So again, so your buy order would never get executed in this case, and you would have been prevented from getting into a losing trade. So things like this will happen. So let's say even if you got in, you thought this was a good breakout and you got in, you should be out at this point. So you shouldn't be in this trade all the while down here. So we can look at a few stocks here. Tata Steel. Tata Steel. Okay, so Tata Steel doing a Kumo breakout at this point. Notice the distance to the Tenkan and rather Kijun. And the Kijun is not going to move now until the stock either breaks, pierces that high, or another couple of weeks, after which your lows are starting to go higher. So you have a lot of gap here. Would I be afraid to buy it? No, I would be okay to buy it above the high here, knowing fully well that there is a good chance, maybe buy half a position here, and then wait to see if it gives you a better buying opportunity as the Kijun comes up for the next half. If you buy half and it starts going up, then at least you're making money on the half. So that's the way I'll play that. Let's see, Lupin. Lupin, if you're short, if you hold some puts in this one, you continue to hold. You do have a big doji here, and the distance to your Kijun is quite a lot now, so you definitely take some profits off the table as soon as it pierces the high of this doji. Um, Definitely take some off the table. And let's look at one more. Infosys. Infosys is just a junky stock. Just by looking at the chart, it should be easy to see. You have alternating Kumo, right? A red, bearish, bullish, bearish, bullish, bearish. So that automatically tells you it's a stock which is going nowhere. So I would definitely stay away from this one. How about TCS? TCS is almost the same thing here. Bearish, bullish, a little bit of bearish here, bullish, bearish. Um, These stocks probably I would probably stay away from this one too, though this stock is a little bit better than Infosys. Um, and let's say one more, IOC. Here's IOC. It had a nice Chicago breakout, but at this point, once it closed below the Kijun, that should have been your stop. That you should have closed it out here. So at this point, this is just going to consolidate because Chicago is in here for at least another month or so. I would expect some consolidation. All right, that will be it.